accounting for partnership firm, and now the partner is retiring. Okay, so when the partner is retiring, what to do? So the simple is that we have to give some credit to the partner's capital account for the share of goodwill, okay, and for the gain or loss. If there is gain, obviously the partner's capital account will be credited. Or if there's a loss on revaluation of assets and liabilities, partner's capital account will be debited, obviously. So all this goodwill calculation and accounting entries for goodwill, okay, whatsoever we have learned in the earlier modules in terms of goodwill, we will be doing the same accounting treatments, but now the partner is retiring. At the same time, we will be revaluing the assets and liabilities, but remember, partner is retiring, okay? So the capital account will be treated as a liability now. So altogether, the balance of the retiring partner's capital account will be transferred to a loan liability account. Unless we pay all together at the same time, the capital account is finished. If we have cash flow with us, we will make payment to the retiring partner at once. This is the right of the retiring partner, okay? So the accounting is very easy now. Since we are done with the goodwill thing, we are done with the revaluation thing, prepare a ledger account of retiring partner's capital account. Start with its opening balance of capital, which obviously will be in the credit side of the ledger account. And if there is some drawing during that period, put that in the debit side. Or if there is a current account of that partner and current account is showing debit balance, put that debit balance in the debit side of the partner's capital account. And if there is credit balance of the current account, obviously that will be closed in the credit side of the partner's capital account. Goodwill and revaluation gain or loss will be affected accordingly. And then if we have cash, make payment of that balance, and that retiring partner is gone with the cash. You are making payment to him, okay? If you don't have cash, then you will treat it as a loan liability on the business. So the important thing is that retiring partner's capital account will be debited and personal loan account will be credited if we don't have cash with us, okay? So this is the important tip in this module. Thank you.